What's up guys? How are you doing today? It's your guy TradeRicch here. So I promised you guys a detailed video about liquidity inducement theorem. Here I am to fulfill my promise. Before we go into the practical example of liquidity inducement theorem, let me give you a layman definition of liquidity. Liquidity is how easily a security or an asset can be bought or sold in the market. I know most of you must have heard about liquidity inducement theorem, but you don't know how to apply it on your chart, but I got you covered. I'll bring some light to it in this video. So make sure you click the subscribe and notification button because I'll be loading you guys with a lot of free content that will walk you through your trading journey from basic to the advanced aspect of trading. So let's go. When it comes to a liquid market like Forex, liquidity drives the market. Without liquidity, there won't be any movement in the market. All you can see here is liquidity. Now let's practicalize it. As you can see from this chart, you can see different kind of candlesticks, the bull candles and the bear candles. So without liquidity, there won't be price movement like this. So it's because of liquidity and imbalance. That's why price is moving in the market. So let's practicalize this. So we have different types of liquidity in the market. We have the equal highs and equal lows liquidity. So let's talk about the equal highs and equal lows liquidity first. So let's take for instance, we are in a downtrending environment and we have series of lower highs and lower lows. So one thing you have to keep in mind is when trying to use liquidity inducement theorem, you have to play it with structure, because anything you want to do in the foreign exchange market, you have to play it with structure. Structure is king and price action is king. Don't you ever forget. So liquidity inducement theorem is just like more like kind of confirmation for you to use when analyzing your chart. So there are times whereby price creates equal highs, right? Equal highs. Right, equal highs. So a lot of people are selling from here, right? A lot of people are selling from here already. They are saying this area as a resistance zone. Don't get me wrong, it is a resistance zone, but without the advanced knowledge of liquidity inducement theorem, you won't know that something is happening here, right? So this is truly a support and resistance zone. This is a resistance zone, but most of the time the big players in the market manipulates this area, because a lot of people are selling from here and then they take out their stop losses and long price into area of order block before moving to the downside. So this is what happens in the market most times. If you backtest your chart, backtest what I'm showing you on the chart, and you find out that this is exactly what is happening in the market. So we have equal highs and equal lows liquidity. So this is equal high. You can see we have a double top formation here, and we call it equal high. So we call it equal high and their liquidity. I'm not saying you cannot sell at double top and you cannot buy at double bottom, but with an advanced concept which we will still talk about, right? So this is what we call equal highs. So we also have equal low formation, right? We also have equal low formation. So I'm going to use an uptrending market scenario for this. So I can also use a downtrending market scenario, but I just want to use an uptrending market scenario for you so you can understand this thing clearly, right? So let me even do something like this. All right. So at this point, what do you think majority of the market participants will be doing? A lot of people will be buying from here, right? A lot of people will be buying from this zone, which is our support zone, and a lot of people will be selling from this resistance zone, because we have equal highs. So your equal highs might be double top, it might be triple top, it might be a lot of tops, right? So it depends on what the market is doing. So this one, you can see this one is giving us a double top, while this one is giving us a triple top. It doesn't matter, it is all equal highs. And what we call equal highs is also called buy side liquidity, while the lower one is what we call the sell side liquidity. So this is our buy side liquidity, buy side liquidity. So you can call it equal highs, or you call it a buy side liquidity, whichever one you want to call it. So let me save it as buy side liquidity, the BSL. So it doesn't matter. Let me tell you something about this market. Another person might want to use equal highs, another person might want to use buy side liquidity, another person might just want to use liquidity. We are all saying the same thing. It is just English. So don't fall for all those times you are seeing on different charts. So Just focus on the one you can understand for yourself, so you can able to trade the market with simplicity. So you don't really need all this tagging of your charts with names and all of that, but it's just for you to identify what you are doing. So as a newbie or as a beginner, or you are just starting your journey with smart money concept, you might want to label your chart like this. But as for me, I don't need to label my chart because I have trained my eyes to see all these things clearly, right? So this is sell side liquidity, sell side liquidity. And what do you think majority of the retailers? We are the retailers. Don't forget, even if we trade smart money concept, we are still retailers, right? So don't fall for people telling you that because they trade smart money concept, they are not a retailer, they are trading with the banks. That's rubbish. I'm sorry to say, but that's totally rubbish. I used to talk like that before. I used to say I trade like the banks, but as time goes on, with experience, I get to understand that we are not trading like the banks. We are just trading in line with them. It's just like a remora fish, right? A big shark and a remora fish. The institutions, which are the big players, the market makers, they are the big fish. While the remora, we are the remora, we are still a retail trader. But if we dare cross in front of the big shark, they will hunt us as well. So that's why we follow their footprints in the market. What are their footprints? Their footprints are order block. They buy and sell candle, buy to sell candle, and sell to buy candle, right? Whichever one you want to call it, you can call it supply and demand as well. And don't you ever forget, supply and demand are also support and resistance. They are just highlighted zones. Don't fall for those people trying to sell you bullshit calls that support and resistance is different from supply and demand. They are all the same. They are just highlighted supply and demand, right? So let's go. Sell side liquidity. Sell side liquidity. So what do you think the majority of we retailers will be doing here? So without proper knowledge, of smart money concept, a lot of people will be buying from here. Even if you are trading support and resistance, you will feel this area is a valid support and resistance zone because we have multiple touches, and you'll be waiting for your confirmation entry to long the market here. Yes, you can get your confirmation entry and still hit stop loss, because there are a lot of stop losses around this area, and there are a lot of stop losses around this area as well. So this is what the big players do. They try to move the market to the upside, then bring it down back to an area of order block before moving to the upside. You can see price took out this sell side liquidity before this buy side liquidity, because we are in an uptrending market scenario. Then look at what happened here. Big players need this liquidity because they need sellers in the market before they can take this liquidity, and they need buyers in this market before they can take liquidity, right? That's exactly what is happening in the market. So if you want to know what's happening here, it's just as a result of an order block, which is the footprint I was talking about. It is the footprint I was talking about. So we've talked about two types of order block, two types of liquidity inducement theorem now. So we've talked about the equal highs. Okay, it's actually one. The equal highs and equal lows, which is also sell side and buy side liquidity, is the same thing as equal highs and equal lows. Then we have the trend line liquidity, right? We have the trend line liquidity. Let's take, for instance, we have an uptrending market. Yeah. Then price is giving us this kind of movement, right? Let's say price is giving us this kind of movement. Then something like this. So a lot of people will still be caught up with these sales. Some people will still be selling this market, expecting price to touch their trend line and start moving to the downside. But the fact is that this trend line has now become a liquidity, right? This trend line has now become a liquidity. It's now a liquidity because a lot of people are selling from this area, and the big players in the market is coming for this liquidity. So you just have to wait for price to respect another block or a demand zone, or your support zone, whichever one you want to call it. Then allow price to tap into your zone, right? Allow price to tap into your zone, then liquidate this what is it called, trend line liquidity, right? So I'm going to show you a practical example on the chart. So we've talked about buy side and sell side liquidity. We've talked about trend line liquidity. The last type of liquidity I want to talk about is extended liquidity. I actually call it extended liquidity. I don't know what other traders or other mentors might want to call it, because I just came up with that name myself because the way it plays out in the market. So what I call extended liquidity is, I actually don't know about this extended liquidity before. This is the type of liquidity I understand in the market, but with experience, then I came across a video on YouTube as well. So I'm not just going to lie that I came about it on my own. You are not going to pay me for that anyways. So I came about it on YouTube. So it's just something about this, something like this. So let's take for instance, our price is moving in an uptrending market condition, right? Then price then push to the upside. Let's now take for instance that price fails to break this structure, right? Price fails to break this structure. Now I'm going to wait for confirmation to short the market from here, just to give me this pullback, right? Remember that I want to see a pullback. You want to see a pullback before an uptrending market condition. You want to see a pullback before price starts to move to the upside. Now this is how to bank on the pullback. Before I used to focus on the main trend, which is the pro trend. Then I don't trade the counter trend. The counter trend is the pullback, while the pro trend is the impulsive move. But now I take both the pro trends and counter trend, because I understand clearly how to get on the counter trend without being trapped. So I actually have to wait for confirmation from here. Then I'll short the market from here. Once I have my confirmation, then I know that I'm just trying to chase the counter trend. So I know where to put my target and I know where to put my stop loss. So that's that about that. Then another thing about this extended liquidity is that there are some other blocks that don't hold price. So this kind of other blocks is just something like, let's take for instance, I'll still show you guys on the chart. I'm just trying to give you the mental framework for this. So let's take for instance, we're in a downtrending market scenario, right? And price is giving us something like this. So smart money concept or institutional currency trade, the ICT, or supply and demand, you are expecting price to pull back to your supply zone, then you take your entry from here, right? And this is the main reason why I stopped using limit orders, guys. This is the main reason why I stopped using limit orders, because there was a time I was using limit orders and market price was hitting my stop loss back to back. You know, it will mess up with your psychology for real. It messed up with my psychology. I began to doubt my trading strategy, if it was working or not. It was working for me, but at that point I was beginning to doubt it, that what's happening in the market, right? It was just losing streaks. So I just came up with this idea that after watching that video, then implemented it to my strategy. I tweaked and refined my strategy, and I came across how I can use it to my own advantage, because the video I watched was not really smart money concept. It was just retail strategy, right? But I just tweaked and refined it to know what exactly is happening in that market, right? And why that kind of movement is happening. So you're expecting your price to come back to your what's it called, order block, right? To tap into your order block before moving to the downside, right? So as a smart trader, you just want to wait for price to come back to your order block, then place your limit order and expecting price to move in your direction. But most of the time, price will just hit your order block, activate your entry, then take you out of the market, then still move in your initial direction, right? It happens most of the time, because the market is dynamic. It is the way you trade the market this year is not going to be the way you trade it next year. You have to adapt, you have to evolve with the market, right? So that's I just focus on what price is doing. I don't predict anymore. I just focus on what price is doing. I want to flow with what the market is doing. If I'm not just going to, I'll analyze for sure, but if price is not moving according to my analysis, then I'll adjust. I don't marry my chart. So if it's not going as planned, I'll adjust to what price is telling me, because what you are saying on the chart is their piece of information, right? It is just a language, so you have to understand the language. So let's go to the chart to explain all of these things one after the other. So you can see this is an example of this is GBP JPY, the 1 hour time frame. This is an example of buy side and sell side liquidity. So you can see at this point, price was giving us series of higher highs and higher lows, right? Series of higher highs and higher lows. Then at some point, we broke this structure, right? After breaking this structure, after breaking this structure, price put to the upside, created another break of market structure. So you can see that price has not really mitigated this order block. Let me delete this so you can see clearly. Price has not mitigated this order block. So this is our order block. It is unmitigated. You can see price tried to put to the upside to mitigate. Instead of mitigating this order block, then price moved sideways to create bunch of liquidities around the stop, right? Because a lot of people are selling from there already. A lot of people short the market from there. Of course, they make profit, and some let's take for instance, if 100% short the market from here, majority of them took their profit already, while some are still in the trade, right? That's the psychology behind it, why some of them are still in the trade. So this is the buy side liquidity, and this is the sell side liquidity. This is a ranging market, right? Price was ranging, and you can see a lot of people are selling here. Sellers, because we have resistance, support. So instead of price moving to this unmitigated order block from here, price left it open. It is a trap, right? Price left it open. It is telling you that price is still going to come back there in the nearest future. And you can see this sell side liquidity was taken. This sell side liquidity was taken. The sell side liquidity was taken out, right? And the buy side liquidity was also taken out. So after taking out this sell side liquidity, it is now telling you, it is giving you clue that this buy side liquidity is the next target for price to liquidate. So remember that this is another block. I told you guys that you have to play this thing with market structure, because market structure is the number one thing you have to consider when trading. That's the fact. Whatever strategy you are using, if you are using support and resistance, if you are using trend line, or whatever strategy you are using, I don't want to know the kind of strategy you are using, but if you are not playing your strategy in line with market structure, you are doing totally rubbish, right? That's it. That's the fact. So you have to play it with market structure. Market structure is the number one thing you have to understand. So if you don't understand market structure, I'm sorry, you have to go back to market structure video to watch about market structure before you can understand all these things clearly, right? So you can see price tapped into this order block, right? Then sweeping out all this liquidity above this buy side liquidity, right? And you can see here we have our entry. So I'm not going to talk about my entry model here because it's strictly for HTA members. But if you are smart, you can know why I entered from here. So I don't have to tell you guys. So you have to put in the work yourself. I can't spoon feed you every time. So you have to make your research. You can even know why. If you are smart enough, it is very simple why I place my entry here and not on the other block. It is very simple. But I'm not just going to elaborate on that right now, right? So you can see how clean the chart looks like. The 1 to 5 risk to reward, because I understand what liquidity is. I understand the structure. Now let's take a look at another example. So as you can see right from here, you can see price gave us a shift in market structure, right? Price gave us a shift in market structure here, and at this point you can see this zone you are seeing here. We had another internal shift in market structure, which confirms that we are ready to move to the upside. Then see what happened after we have that shift in market structure here. After we have that shift in market structure, see what happened. So this should be our demand zone. This should be our demand zone. Then see what happened. Price took out this demand zone, then start moving to the upside. It is exactly what I was talking about. Price will come to your order block, pierce through it, then start moving in your preferred direction again. This is liquidity, right? It is liquidity. Why this is happening is because we still have another order block below, right? We still have another block below. So I don't even bother myself to identify this other block below. Once I find something like this and price return back to my preferred direction, then I'll enter the market. With confirmation, then I'll enter the market, right? Then my stop loss around there, target above, right? It is exactly what is happening in the market. It is liquidity. It is as a result of liquidity. So we have a lot of liquidity. You can see at this point as well, we have liquidity, right? At this point, we have liquidity. Let me show you. You can see price was giving us a series of lower highs right from here, right? We broke this structure, right? A shift in market structure, a pullback to our order block, right? A pullback to our order block, then another push to the downside, a retracement, push to the downside. It's clearly giving us a bearish environment, right? We are in a bearish environment. And see what happened after this break of structure. This order block has not been mitigated, right? This order block has not been mitigated. Now come to think of it, if you don't have this liquidity inducement theorem knowledge, you will be selling from here, where majority of traders are selling from, because we have a lot of liquidities here. This is a resistance zone to some people. Yes, it is a resistance zone. Even to me, it is a resistance zone, right? It is a resistance zone because we have a lot of rejection here. So a lot of people are selling from here already. Then see what price did. Price pushed to the downside to move in their favor a little bit, then flush them down the drain, right? Before moving to the downside, right? So this is liquidity. A lot of stop losses are here. A lot of people are putting their stop losses here, and then price will just reverse on them. So that's an example of liquidity, buy side and sell side liquidity. And this is just a perfect example of the extended liquidity I told you about. So you can see what happened here. This should be our order block. Let me go to the 1 hour chart so you can see clearly. So this is the 1 hour chart. As you can see, this is the 1 hour chart. After having that break of market structure, this transition, this is a transition, a shift in trend, right? You can see this is the downtrending market movement, series of lower highs and lower lows. And this was the last significant lower high formation, which was taken out, right? This zone was taken out before price then pushed to your downside. So we should be expecting price to react from here to move to the upside. Then see what happened. Price did not move that way. You can see price broke through our order block, which is our demand zone, then move back into our order block, right? So once price breaks through our order block and returns to our order block, it is now valid for me to buy the market again. So I don't care if price breaks my order block. So that's why I don't set limit orders anymore. This is the main reason why I don't set limit orders. I don't use limit orders anymore. I used to use limit orders before, but you know, as time goes on, you get more experience and you evolve with the market. So I just tweak and refine my strategy to my taste. So you might still want to use limit orders. I'm not disputing that. I'm not saying you shouldn't use limit orders, but this is the main reason why I don't use limit orders anymore, because price tends to clear your order block, then move back into that order block, then start moving to the upside, right? So you can see that's exactly what happened there. And as you can see from this what we have on the 1 hour time frame as well, a lot of people will be saying this as a supply zone. Of course, it is a supply zone, and it is also an example of the extended liquidity I was talking about. So this is your supply zone, right? This is your supply zone, right? This is your supply zone. And see what happened. If you are using limit orders, right, you're replacing your sell limit around here, right? And let's say you want to be on the safe side, you are putting your stop loss just a little bit around this rejection block, right? Then your target, let's say down below or somewhere around here, right? If you are on the sell side, right? And you can see what happened. The price will take you out with just small rejection, then start moving in your preferred direction. At this point, you start it will start messing with your psychology one way or the other, right? If you are not strong enough, it will mess with your psychology. Even if you are strong, at some point, let's take for instance, you have this kind of market condition that takes you out of the market 3 to 4 times on a row, right? It's not that you are not getting the direction of the market, but something is happening, right? It is liquidity. Now let me explain why this is happening. It is happening because this week you are seeing here, there's no way to know that it is going to happen like this, right? It is after it has happened, that's when you know why it happened, right? Don't force yourself to know what's going to happen. Instead, know why these things are happening, right? So when this one has happened, I can say that it is a liquidity, an extended liquidity, right? So I like this kind of entry confirmation, so I call it extended liquidity. That is, price took out this liquidity and respected the one above, right? Price respected the one above this rejection block, so it's still giving me that sell confirmation. So I'm still looking to sell. But let's take for instance you that you have placed your sell limit here and price has taken you out of the market. Will you still want to enter the market? Be sincere with yourself. Will you still want to enter the market? That is why I wait for my own confirmation. I don't just place sell limit anymore. So I wait for this kind of confirmation, then I'll enter the market from here. Then my stop loss around this area, then target here or target here, right? So this is exactly how I trade liquidity and imbalance. I'm still going to explain the imbalance aspect, but if I talk about the imbalance aspect, this video will be too long for you to watch, right? So as you can see, this is the what's it called, trend line liquidity. You can see we have our first touch, second touch, third touch, and a lot of people are buying from this touch already. A lot of people are buying here, but this one is a liquidity, right? I'm not telling you that trend lines doesn't work. I use trend line myself. I use trend line bounce. I use trend line break. But you have to know that trend line becomes liquidity at some point. So at this point, this trend line is a liquidity for price. And you can see what happened. Price pushed to the downside, then starts moving to the downside. You can see that's exactly what I mean by trend line liquidity. So we have a lot of examples on the chart. If you go to your chart, just backtest all these things, see why all these things are happening. Then you gain more experience with time, right? So you are not going to get everything at once, right? With time, you get to understand why all these things are happening in the market, right? So a lot of people are selling from here already. Let's analyze this one as well. So after this ranging market, right? After this ranging market here, we have a break of this structure, right? A break of this structure, a pullback, another break of this structure, right? It's now confirming that the market is in a bearish environment. But on the higher time frame, it is just a liquidity on the higher time frame. So if you are a day trader or an intraday trader, you can take advantage of this sell right here, right? You can take advantage of this sell. Targeting this your order block. So this might be your order block around here, or somewhere around there, because the other ones has been mitigated. All these ones has been mitigated. So you want to choose this one, and you can see what happened. If you are using that limit orders, right, you will be trapped. If you are using that limit orders, you will be trapped here, because what happened here is extended liquidity that I explained. So if I'm to enter this trade, I'm not going to place my own limit orders here. I'll identify this one as a liquidity area. I'm not just going to identify as a liquidity. I'll wait for price to do this thing before I can identify it as a liquidity. So I'll wait for price to take out this area, right? Since price has taken out this bearish structure, so we're in a bearish environment on an intraday perspective, right? Extended liquidity. So because we have a break of market structure here, we have a break of structure, right? So then I'm confident enough to take the trade upon confirmation. So this is where my own entry will be, right? Then my stop loss above this week, right? And that will give me a 1 to 5 risk to reward, right? Before I bring this video to an end, I would like to tell you about Asian range liquidity as well. Asian range is also another type of liquidity, but it is not a concept that I invented on my own. It is usually meant to refer to the high and low prices made by a currency pair from the time that Tokyo opens to the time that London session opens. So once London session opens, the London traders will take out liquidities in the market because there's low volume in the Asian session. So the Sydney session and the Tokyo session doesn't move like that, right? So this is what I mean by the Asian range. You can see I have the indicator here. This blue highlighted zone is what we call the Asian range. We will still talk about that in the next video. So if you would like to watch the video on Asian range liquidity, then click the like button and smash the notification button so you can get notified when I post the video. Peace out.